traders at Axis Bank expect the bullish run seen at the bond market to be sustained owing to the improved market liquidity and high demand for debt instruments. Kolawole Komolafe, Treasury Team Member at Axis Bank, joins me now for more market movements. Kolawole, thanks a lot for joining us on the show today. Now, we've seen that bullish run manifest on the February 2034 paper and also looking at the 20th March 2027 bond as well. Walk us through the trading sentiments, demand seen across the curve, and then the percentage handles we are witnessing.
Yeah, hi David, it's a pleasure being here. So I'll just take us through the different market segments just to give a bit of context to what's happening in the fixed income space. So there's been a lot of liquidity crunch where the market has been in a repo. It opened yesterday at about 73 billion Naira repo, and subsequently we've seen the interbank rates, both the OPR and the overnight rates at elevated levels at 27.6% and also 28.4% respectively. Yes, you're right, there was a bit of liquidity coming to the system. That was on Monday. That was due to the coupon payment that came into the system on the 2029 bonds. So in the fixed income space for the bond market, we've seen a bullish run, particularly on the 2027 and the 2034 bond, where you've seen trades consummated at 19.45 and 19.5% respectively. We are not seeing a lot of activity on the 2031, and we expect that this bullish run will continue going into next week. For the Treasury bill space, we've seen offers at 20% and above. We just had few bids to hit those. We've just seen a few trades consummated at those levels, and subsequently we saw that bids went high, just marginally by about 6 basis points across the curve. It's been bearish in the Treasury bills market, but that's a totally different story in the bond space, where, like I mentioned before, we're seeing trades particularly on the 2027 and the 2034. And if you permit me to just speak briefly on what also happened in the FX market, where the CBN intervened on Tuesday to try and bring some stability into the market. Subsequently, on Monday and Tuesday was reversed, and that's what has happened across those market segments.
Yes, and I hear you quite clearly. This May, although we didn't have any auction throughout this week, how are things panning out for next week, the outcome?
Yes, so we have an NCB auction on Wednesday where there'll be so we have also a maturity on Wednesday where there'll be 178 billion Naira that will be maturing, and we're also expecting an auction for that same size on Wednesday. We look to see where rates will close, but we expect that it will close as where they closed the last time at above 20% for the discount rate. Talking about the 1-year paper. So we want to see what happens on that space, but we expect that depending on what happens at the primary auction, it will filter into the secondary market. But we expect that stock rates will close where they closed at the previous auction.
Exactly, and we've also seen that the federal government has been able to raise about 11 trillion Naira through the T-bills and bond auction, looking at the cumulative period of April to from the month of January to April. But in terms of the borrowing plans as well and the excitement we still have in the market, let's talk about that, looking at alternatives for investors who are weighing whether or not the attractive offers we have at the fixed income is still enough of an attraction versus what we have playing out in the equities market.
Yes, so because we've seen these high yields sustained in the fixed income market, what you see is the opposite happening in the equity space, right? When periods when yields are this high in the fixed income market, you see investors diversing from equities market and then heavily invested in the fixed income space, which is what we've seen. And like I mentioned before, we expect that yields will remain at these high levels, which is part of the strategy of the central bank and also the federal government through the DMO to offer those attractive rates just to attract FPIs and also the what's the name now? Borrowers.
Yes.
So we expect that if rates are at those levels, would see significant activities continue to play out in the fixed income market.
Yeah, so many have described this as the season of hot money, but whether or not we can really sustain this momentum is another question here. And we are all counting down now as well to the Monetary Policy Committee, which would also hold later this month as well. We are seeing other West African MPCs also having these considerations come into the fore, looking at currency volatility and how we can also have a bigger flow of investment into the country to stabilize the overall economy. But we'll leave the conversation here for now. Kolawole, thanks a lot for your time on the show today. Well, that was Kolawole Komolafe, Treasury Team Member at Axis Bank.